Welcome to the Payments Unpacked podcast. I'm Mike Chambers, and previously I ran the UK's payment schemes. I'm now chair of Request to Pay company RtP. I'm a payments advisor, and I publish the Payments Unpacked newsletter and podcasts. If you haven't subscribed to my newsletter yet, then please subscribe today at payments-unpacked.com. You'll also find a link in the show notes below. Now, to help us unpack a particular subject today, I'm joined by Peter Cornforth, and Peter is the Commercial Director at RtP. Now, I'm fully aware that Peter at RtP have featured in previous podcasts, so be rest assured this is not a previous performance being replayed out to you as a repeat from Payments Unpacked, but it's a very different angle on some streams of thought and thinking that Peter and the team at RtP have been thinking through. So in this podcast, we'll be focusing on three things. The first thing we're going to look at is the intersection of direct debits, request to pay, and variable recurring payments. Secondly, we're going to be thinking about how the ecosystem stakeholders can empower consumers and businesses to choose how they pay, when they pay, and who they pay. And in our final question, with the future of OBIE being discussed, we're going to have a view from Peter about what he thinks the future ought to look like. So, thank you for joining the Payments Unpacked podcast today, Peter. Just a very quick introduction from you about and about RtP, and then we can get into the meat of those questions.
Perfect. Thanks, Mike. Thank you very much for having me. Commercial Director here at RtP, and I've got about 15 years payments experience, the likes of Vodafone, Amazon, Santander, and PaySafe, and I've been very fortunate to spend the last 5 years in open finance, whether that be open banking or wider scope with RtP. And in terms of RtP and what we do, so we're here to help keep the lights on, houses heated, families connected, all by helping consumers pay their bills. And we do this using Request to Pay. And Request to Pay takes open banking a step further. So with open banking, you've got standardized retail banking APIs. Request to Pay takes that further by also standardizing the merchant side, the merchant APIs. And what this means is you can enable two-way messaging between a biller and a payer, regardless of who you bank with. RtP, Europe's leading provider, provides SEPA connectivity as well as certified in the UK. And our customers are primarily banks, but we also serve increasingly businesses directly who want a lower cost of cash collection.
Thank you so much, Peter. It's always good, isn't it, to know a little bit about the person that's sharing their views on podcasts and at webinars and conferences. So thank you so much for that, Peter. I want to jump in with a question, and the question really revolves around some favoured acronyms of the moment. We talk about RtP, we talk about VRP. All the time they are in our topics of conversation. And as I said in the introduction, Peter, I'm interested in this intersection, almost like a Venn diagram, the intersection of direct debits, request to pay, and variable recurring payments. So the question I've got for you today is how might request to pay payments and VRPs coexist in a way that they could provide a better or different consumer focused solution to direct debits?
Yeah, perfect. We love our acronyms, right? So VRP, variable recurring payments, and RtP, request to pay. So both are serving very similar use case, regular payments, but we find they're actually complementary. So VRP looks a bit like a direct debit. You agree a mandate with the customer up front for a series of payments, and when those payments come around, they automatically trigger a payment from the customer to the biller without any customer interaction because you've already agreed the mandate. Request to pay is a little bit different. You also agree a mandate, but you agree a mandate for the biller to be able to contact you and ask you for a payment, and the customer is authorizing each and every payment. So what you've got is a nice mix there, that VRP offers less friction, but also less control, and RtP is the converse. You've got a bit more friction, but you've got a lot more control. So we think there's a nice complement, and it depends on the level of trust you've got with the biller, between the biller and the payer, as to which solution you might use for your recurring payment. You can see it that if you look at it independently, VRP might be great for mortgages. It's a payment you don't want to miss. You trust your provider, so you want that payment to go automatically in the background each and every time. Whereas request to pay for those recurring payments where perhaps you don't know the provider so well, you don't necessarily trust them, so you might start off on a request to pay service, and that's when you look at them independently and you look at different providers, you might use different tools. But you might also see where they work very well together, and that becomes really exciting. And I know this is something you've talked about, Mike, in terms of Direct Debit 3.0, how you might blur the lines between the two. So if you've got signed up for a subscription service, and a lot of these subscription services now offer you a trial period, you might sign up for that and start paying with Request to Pay. You might find, actually, I quite like this service, but I don't want the friction of authorising the transaction each and every time. So why don't you then flick that to a VRP service so it happens in the background? And you can see then that actually Request to Pay and VRP could actually work very well for the same merchant, just different contexts as the relationship develops.
Thank you for that. I mean, you mentioned 3.0. I think if you're interested in this sort of intersection of these payment instruments or collection instruments, then it would be good for folk to sign up for more information at 3.0.digital, and it would be good to share some more information with folk on that score. No, thank you, Peter. Thank you for just sort of sharing some of that intersection idea. You know, Direct Debit has been around for 50 odd years. It's served the market well, 4.5 billion transactions. You know, both Request to Pay and VRPs are the new kids on the block. And it's been interesting to explore with you and hear a little bit with you today about how they might coexist and complement each other. And that's why I call it the intersection, that part of the Venn diagram where there's a nice synergy in terms of meeting customer needs. But of course, as we think about new things and we think about empowering consumers, I was particularly interested in your views around sort of stakeholders in the ecosystem. You know, within an ecosystem, we've got regulators, we've got billers, we've got banks, all looking to work out in a payments environment how we can best empower consumers to choose who they pay, how they pay, and when they pay. So with that in mind, what should we expect from these stakeholders? What role would we expect them to play?
Yeah, it's an interesting space, and there's lots of interested parties. And I think particularly from a regulatory angle, we've seen kind of three seismic events. You've seen the pandemic, which has really driven remote payments. We've seen cost of living crisis, and we're seeing massive authorised push payment fraud. There was a stat that Trading Standards put out where, you know, if you lose £100, that would mean that 25% of UK families would not be able to pay their bills. So you can see actually the two interacting together, and that's becoming a real problem. So we think that regulators need to be a lot more active in this space. And the primary step we would look to ask them to take is to prevent banks and payment providers from sending emails and SMS with clickable links. And the reason I say that is if your bank sends you two messages with clickable links, and then the third message you get is actually from a fraudster but with a clickable link impersonating your bank, you're very likely to click it. So actually we need to stop the practice of banks sending out payment links in SMS and email. It's just opening the avenue for fraud. The second thing we would look, and you know, there's precedence for this with the Monetary Authority of Singapore, is that if you are removing that particular vehicle, then actually encourage app-to-app transactions. So we know that mobile banking is more secure than online banking. So actually, how do you kind of use those secure applications, it could be via Request to Pay, to actually stimulate those transactions in a more secure manner? We think that mandating this is necessary because if you look at VRPs, for example, it's another great example. You need a network of banks. There's no point having one or two banks providing the service. You know, today we've got NatWest that are providing VRPs, and I know Starling's played in this space as well. If you were to sell that to a merchant, there's very, very few merchants that would only be interested in serving just their customer base at banks with NatWest. We need full coverage of that banking space for the service to be relevant. So mandates are necessary here to enable the ecosystem to grow because you need that network of providers.
Interesting. It's funny, isn't it? Every day we get something from a bank telling us don't click on a link, don't click on a link, beware of imposters, take 5, all the rest of it. And then suddenly, oh, it's okay to click on this one. It just doesn't make sense as the UK, as we try and tackle payment fraud in the UK and just the frightening and eye-watering levels of payment. Certainly the regulator, Monetary Authority of Singapore, you mentioned, has taken a very bold step in doing that. But not only stopping something, but with a view to pointing to a solution. And as you've said, there's that sort of ability within an ecosystem. to allow this to empower the consumer about the choice of making a payment, but do it in a very safe environment. Look, I'm going to widen the conversation.
And I think, sorry, just
no, go.
Sorry, Mike, I was just going to add, and I think the thing that makes it even more pressing now is that confluence of the cost of living and the fraud issue. We used to talk about life-changing sums of money being lost. £100 is now a life-changing sum of money for 25% of UK families, and that is a massive, massive issue that we need to sort out.
Yeah, I take the view, we were talking about confirmation of pay earlier this week, and somebody said, well, I don't get much fraud, hardly any. And my answer was, one fraud of £1 causes friction and pain and upset for and impact on individuals, while the fraudster reaps the benefits of that pound and the fruits of their labour. So actually, for me, one instance is bad enough. It doesn't matter how many there are, and whether it's a life-changing sum of money or a smaller sum of money, it's still money, and it's still really important that we shouldn't make things easy for the fraudster. But in doing so, provide solutions that are useful and helpful and friction-free for consumers and businesses to adopt. We don't want to invent more friction in payments and take ourselves backwards. But the last question I'll ask you, 100%. Peter, is a much wider question, and in some respects it's a little bit unfair, but I'm really interested to see what you think here. Look, there's been loads of talk about where to go next after Open Banking Implementation Entity, acronym OBIE, and then much talk about where to go, and there's the work within the JROC, and there's lots of industry discussions going on at the moment. I'm really interested to understand what you think a future OB entity might look like, and not in addition to what it might look like, what should its focus be to move the open banking and open finance story in the UK forward. So tell me what you think, Peter.
Yeah, thank you. And the UK has been massively successful in its open banking. We're all very rightly proud of our open banking services here in the UK. But we can't take our foot off the accelerator. And I think there's a big fear in the industry that we're going through a bit of a lack of direction at the moment in terms of where we should go with the new entity and what that should be. And I think the longer it takes, the more concerned people are getting. I think there are kind of three things that I would ask for. And I think the first is that we have a single organisation that looks after overlay services. So today we've got a number of different industry bodies, Pay.UK that manage request to pay and confirmation of pay, OBIE that's got open banking services. I think that all needs to be under the same roof. They're very similar services. We want competition on those services. OBIE has been massively successful in making open banking a success. I'd love to see them what they can create with confirmation of pay and request to pay under the same roof. I think it would be very exciting. The second aspect, and one of the reasons why OBIE has been so successful, is the mandates around that. So, of course, it needs regulatory support. I think OBIE would have struggled a lot more should they have not have had the support, with the regulator telling banks, or certainly the CMA9, that they had to abide by these rules and make these APIs available. So I think whatever you do has to have some strong regulatory backing and regulatory support to make any traction. I mean, if we left it voluntary, it's voluntary today, and I think we still haven't seen VRPs in the market. So, we need action to help make it happen. And the third point, which is, this is a broad question, and I think to even broaden it even further, is I think, we love what's happening in the financial services space. We can see in the energy sector, there is a massive problem at the moment with people feeling forced to go onto prepaid meters. Unfortunately, because of the immediacy of the crisis, things like the smart data program in the likes of Ofgem has fallen by the wayside. So one of the things I would love to see is those regulated industries like the energy sector, like the telecom sector. I think the future OBIE entity has a role to play there in how you open up APIs in these other highly regulated industry sectors to give consumers control over their data and who they share it with, and move services away from one size fits all, where you get a single big operator that's offering, national services, through to more niche players that can serve specific customer needs. So I'd love to see the future entity looking at these other industry sectors. I think there's huge scope for innovation there.
Peter, thank you. As I introed the question by saying it's a very wide subject, and you've admirably covered that, but you've evidenced that it is a wide subject with a wide solution. So we'll see what happens in the coming months and the output from the the JROC work that's presently going on. Peter, thank you so much for sharing some thoughts today. It's always good to hear what you say, and to be able to share that across the Payments Unpacked podcast network is a real privilege. So thank you very much for your time. Where can we find more about you and about AnswerPay, and how can we make contact with you?
Yeah, thanks very much, Mike. So find out more about AnswerPay at www.answerpay.uk. We're also on LinkedIn, so do look up AnswerPay on LinkedIn, and you'll also find me there too. But feel free to reach out to me on email if you want more information. So peter.cornforth@answerpay.uk. Thanks, Mike.
Fantastic. Thank you so much again, Peter. I'm Mike Chambers, and thank you for listening to this Payments Unpacked podcast. Please subscribe in your favourite podcast app. And whilst you're doing that, don't forget to subscribe to the Payments Unpacked newsletter at payments-unpacked.com. Thanks very much for listening today.